All right. Thank you. If you are joining this video, welcome to a candid conversation. My name is Bobby Staten, the Chief of Clarity, and I am honored to be here today with Mrs. Kiahna Davis of Mind Your Business Accounting and Consulting. Um, super thorough and excellent resource, especially around everything financial. But today specifically, we're going to be discussing the loan forgiveness for the Paycheck Protection Program. So without any further ado, I'll pass it over to Kiahna to introduce herself.
Well, thank you, Bobby, and thank you for this opportunity to join forces with you and your network in understanding all things PPP. And I think for many of the folks that would be listening to this recording, I think that we are at a point where we've gotten the PPP and people are saying, okay, what is next?
Right.
And I will tell you that that what is next question is also what the banks are asking, what is
right.
So, so if you feel like you don't know what the next move is, do not beat yourself up,
right.
because the financial institutions are in a bit of a gray zone right now concerning the process of the forgiveness part of all the PPP loans that they gave out. And so I think you're in the right place to get at least some high level direction in regards to PPP.
Yes, absolutely. And I know in the PPP program, obviously, if you're here, you're more than likely aware of it, but it has been something that has really just kind of evolved with time. To your point, the banks are still figuring it out. Government is still figuring out. Treasury is still figuring it out. And it seems like, from week to week, there are different rules that are kind of laid out in terms of how the program will be facilitated, how forgiveness will be facilitated, so on and so forth. And so, I guess we can just kind of go ahead and jump into it from that perspective. What I love, go ahead.
Go ahead. No, go ahead.
I was going to say I think the thing that I would like to touch on is, first and foremost, when were the last results released? I know, not the results, excuse me, the governing rules, if you will, released for public consumption by the Treasury. What's the latest?
Absolutely. So last week we received, and it was late because we were waiting on the Senate to actually approve and sign off the bill that they got from the House. But early last week, we received additional guidance in regards to the forgiveness part of PPP. And I'm telling you, if I represent a lot of small businesses where we were just trying to bridge a time gap, right? Because payroll was run on this date, but the 8-week count was started on this date, and so we needed more payroll for that forgiveness. And we are grateful that we're in a position where two things happen that are absolutely major: is the extension of time to use the funds,
yes,
and also the allocation of how you can use the funds. And so those two things alone probably alleviated a lot of headache from a lot of small businesses that really were in positions to use the funds, but maybe not in the 8 weeks or in the way that the government initially said the allocation should go. So we're pretty excited about that. And what that means is, instead of the 8 weeks, which started, if you did not know, your 8 weeks started the day the money was deposited into your account.
That's right.
So when banks made that transfer, that's the starting, that was the clock. And you had 8 weeks from that day to utilize the fund in the appropriate way in order to qualify for forgiveness.
Right.
Outside of that, then if you did not use that, you were really facing a loan, right?
Yeah.
A payback.
Sure.
And so I think this allows, especially a lot of small business, a lot of mom and pop shops, especially I see in my clients, anyone that got, 150,000 or less, really are put in a good position to have all of this forgiven. And honestly, the paperwork at this point could be a little easier, especially if you're using some type of assisted payroll system.
Right. Sure. So I think that's a great segue. So let's kind of start at the beginning, right? Let's back up to when, The CARES Act was finally signed off by the president, enacted as law. Now we have the bill in place, and the Paycheck Protection Program, PPP as it's obviously called, was put in place. Take us from where we started in terms of and you mentioned it, the amount of time that businesses, independent contractors, sole practitioners were permitted to have, or actually had to use those funds, and then speak to the percentages and how from those two characteristics have changed to today. Because what I'm hearing is that what we initially thought is completely different from our current reality, right? In those two specific regards. So share with us a little bit more about what that looks like now with the recent guidance that was released.
Yeah, so outside of the 8 weeks extended to 24 weeks. So now instead of the timing starting on the day that the deposit happened and 8 weeks later, now
Yes.
you have 24 weeks. I
Wow.
mean, if like that right there, if that was the only thing that was offered,
Right.
most of the small businesses out there could utilize those funds with payroll expenses, and this would be forgiveness would be a non-issue.
Sure,
So
sure.
that alone just was a great law to pass. We are grateful for the pressure. I think some small businesses created a lot of pressure for Congress to pass this, and the expeditiousness of moving this through the Congress and then the Senate and then the president signing the bill. What also happened in that was instead of the 75-25 split, and if you got the PPP, this should be this should not be foreign to you, but you had to use 75% of the funds toward payroll and payroll related cost, and then 25% on approved business expenses like rent and utilities. And when I say rent, that could have been mortgage interest if you're at a home business, etc. And so what happened was the shift, not only the 8 weeks to the 24 weeks, but also from 75-25 allocation to 60-40 allocation, which allows you now to spend only 60% to payroll and then 40% to rent, mortgage interest, utilities, those type of things.
That's huge.
It's awesome.
Right. No, that's huge. And I think for a lot of businesses, just in the conversations that I've had, as you mentioned, the extension of time just takes some of that pressure off, because now, you may have a loan or a loan amount that, as opposed to being squeezed into that 8-week window, it's twofold. It's the time, obviously, and the percentage allocation. Now there's more breathing room.
Yes.
And you're not as pressed to make sure that the funds are exhausted. You can make more strategic decisions about its usage to support the needs of your business. Because what we've seen, even from a business perspective, finances aside, is that the environment that we're operating in is changing week to week.
Yep, absolutely.
And so having that flexibility is going to be key in terms of making sure that we're then able to forgive that loan and not carry it forward in the future.
Well, Bobby, I want to say this, and especially for small businesses that ran brick and mortar, you're talking about your retail, your restaurants. I mean, this was a huge relief to them, because some of them, because of COVID, right? Like we can't forget that COVID is still out there, COVID-19, really had to shut down or reduce their hours. So even if they wanted to bring back employees and pay payroll, they honestly could not do that in the time frame the original bill allowed for forgiveness.
Right. You're absolutely right. And so, to that point, the impact to them would have been, we've got the money, haven't been able to use it. And then even from a labor perspective, right, there were workers who were like, hey, I'm actually making more on unemployment than I was coming to work every day. So they were having trouble getting people back in the door, right? It's like, yeah.
I mean, anytime you're going to pay an extra $600 a week on top of whatever the minimum unemployment wages were in your state, I mean, you really, it just wasn't economically beneficial for you to move over. So you were leaning on people's, ultimate almost integrity to say, yes, I'll rather work than collect unemployment. And besides that, what a lot of parents with two earner households, childcare, those things come into play. And so we were, small business and how that impacts the family. This amendment to this particular bill was just greatly appreciated to relieve some of that pressure.
Absolutely. So now that we have, those two key pieces in place, businesses have a little more breathing room to make use of the funds.
Yep.
When we look at the actual application itself,
Yep.
and obviously, there's a standard form that the Treasury released, but kind of paint a picture for me of, if I'm someone who went the non-bank route and maybe filed for PPP through, say, QuickBooks or PayPal, or maybe I went through a credit union. How does that application look in some of those different environments? Are you finding that it's primarily standardized and everybody's really just following a similar process, or is it truly something that varies depending on who your lender was?
Well, first of all, it is going to vary with whoever your lender is. Just like the PPP application varied with time and how banks and financial institutions process them, we're anticipating there's probably going to be some small variances in regards to how banks and other financial institutions process the actual application. But what I'm hearing, at least from some of the I deal with a lot of kind of regional banks and then some national banks my clients do when I help them get the PPP loan at this point. What we realized is that most of the financial institutions at this point have not put in the process to accept the application.
Oh, wow.
So
okay.
Just like it was a ramp up for banks to, from the approval of the loan, from the approval of the CARES Act to actually implementing how are we as a financial institution going to process millions of applications. People had to retrofit and scale their business, their financial institutions. And so now what I'm hearing, at least from the Chase, PNC, Regions, Huntington, some of those regional and national banks they haven't rolled out that process. So if you have the application, then you follow the application and have it pre-filled out. But every financial institution is going to have their own process. It can be as simple as some financial institutions are going to have fillable forms where you go online. Some of them are going to have uploads, right? So you fill out the actual form, you upload it. So you're going to have to really pay attention. And what the CARES Act process taught me is to have a good relationship with a bank or a financial institution, because you just don't know. I'm even anticipating like the forgivability of all this will tend to at maybe a small level vary with the financial institution. I'm going to give you an example. I had a client who, when it first came out, got approved to have some 1099s included into the calculation. That should not have.
Which was, again, another victim of that guidance that shifted.
Right? And now we know that shouldn't happen. So now the question to the financial institution is, well, do we pay the money back? Are you going to ask for some type of exclusion or some type of forbearance? I don't know what this looks like, and we're really waiting. I actually contacted the financial institution a couple of days ago in regards to this, and really what I'm getting is, you know what, we don't have the process down. As soon as we do, we'll contact you. There's usually going to be a portal or some sort to get that. So I think business owners at this point need to make sure either they work with their accountant, or if you don't have an accountant, making sure that you can really put your hands on all these expenses and the documentation for the legitimate expenses for forgiveness.
Yeah, great point there. I know that there was a set of documents that were pertinent to getting approval for the loan. On the forgiveness side, what do those documentation requirements look like? Are they similar, or what do you foresee banks looking for in terms of being able to confirm that the funds were used as expected?
Well, so if you had payroll
Hmm.
and you your payroll taxes quarterly, you're probably using, some type of payroll service like
Right.
ADP, Paycor, et cetera. Those companies have really scaled, and offered, some of the small businesses, really the standard reports needed to have for PPP. They've done the calculation. But let's say you don't have that, or you included some other things. What my suggestion is, if you're paying W-2 wages, that
Yes.
you have your 940, 941s available,
Okay.
for the particular time period. And
Okay.
if you don't have those, then at least, because I know depending on when your quarter ended and when you're going to file those quarterly
Right.
tax returns, payroll tax returns, you need to keep the payroll summary. And most of the systems out there, most of the companies, payroll companies, offer, your biweekly or weekly payroll
Right.
summary.
Right.
What you also have to be conscientious of is the FTE. The whole purpose of the CARES Act was to maintain the same level of FTE. And
Yes.
from my understanding, that requirement has not gone away. So
Okay.
whatever you use to calculate your FTE to get the PPP loan is
Mhm.
the same calculation you need to verify, with the bank or the financial institution, that you kept the same, amount of FTEs, or full-time equivalents. And so that can get a little tricky, because you can have people move in and out. Let's say you use 2019's information and you had 10 FTEs. When COVID hit, you had 2 employees that said, you know what, I'm out of here. And to your point earlier, it was probably cheap. They received more income in their household by, declaring
Right.
unemployment. So now
Right.
you're left with 8 FTEs. And so that puts a lot of businesses in a little bit of a bind in saying that, okay, we maintain the FTEs. And so from there, what we're trying to figure out is, will there be penalties if you can still demonstrate that you spent the money on payroll
Right.
and or mortgage, rent, utilities. And
Right.
so you have to be careful. But if you let's say you hired or rehired back, that also counts in the calculation of the FTE.
Great clarifications. And so, to that point, it sounds like essentially, from a forgiveness perspective, what folks are looking for, what the banks are looking for, is confirmation that the number of employees that you had when you applied is the same number of employees that you have now that you're applying for forgiveness.
Yep.
To the degree that you have sustained that employee count, or as you noted, FTE, that will determine the amount that you're available for in forgiveness. If that number is decremented, so if you had to, for whatever reason, roll someone off or somebody left, it sounds like there are some different levers that are in play, because it may be a situation where somebody made the decision to leave, or in the case of an actual termination, in either case, the employee count has changed, right?
Yes.
But the premise is different. And
Yes.
so if I am a borrower, I don't want to carry the burden of someone finding another job somewhere else. You
Right.
know what I mean? And
Right.
so those are the kinds of things that I imagine will be a part of the ongoing conversation once the
Yes.
forgiveness applications are
Because
submitted, is really understanding the context.
absolutely. And so that is the clarification, which I believe, just my professional opinion, this is
Sure.
not written anywhere, but
Right.
I believe that those are the conversations that are going to be very financial institution, specific, right? So
Right.
what does that look like? And especially if you can demonstrate that you have spent the money appropriately, right? You kept, your employees hired, you didn't, reduce their wages.
Sure.
Um, you paid your rent and utilities to keep the brick and mortar open, or whatever office space you have. That's where I'm trying to at least get clarity for some of my clients, because I have 1 or 2 clients that, some employees just said, you know what, I'm not going to come back.
Yeah.
And
Yeah. Right.
what we're trying to determine. From that, you know, when you talk about the FTE and maintaining that
Right.
and the documentation, that's for people with W-2s. You know, they pay wages. But you
Yep.
have some people who did not apply for PPP, that did not have wages. So they could be 1099s, or you could be owners in your particular company where
Yep.
you were the sole, you know,
Right.
employee, if you want to say. And so there's some different requirements there.
So that was a great segue to my next question I was going to ask. What I saw on the front end of this, the unfortunate truth is that the guidelines were not crystallized for the independent contractor sector and the sole proprietor sector until within that first round, until the funds were basically gone. So I would say probably a day or two before that first round was extinguished is when we finally got the guidance that we were looking for independent contractors and sole proprietors. Now, I'm hoping that most were able to take advantage of the second round. In the case that they were, my question to you is, how do those documentation standards differ for people who are classified as an employee or are 1099s and they're just simply taking owner's draw? So they don't have a payroll system that they're subscribing to, that sort of thing. How do those documentation standards vary there?
Well, so there's two scenarios. Let's talk about the independent contractor or the owner that takes owner's draw. You know, you're single member, S corp, whatever. And so here's the beauty of it. It's actually it probably is going to be easier because really it's just a calculation at that point. They're going to take 2019 information and do a calculation that's 1/8 and 1/52nd of your earnings
Gotcha.
for that corporation. And so that's what you have to prove. But what that does is, I mean, think about the math. The PPP gave you 2.5 months
Right.
when you calculate it.
Yep.
Now you're only going to get 2 months, kind of, I wouldn't say automatic forgiveness, but that's going to be the calculation used for a forgivable amount. So then in my mind, I'm doing simple math, right? There's a half a month left.
Right.
And so that's where you have to, I mean, just being 8 weeks
that half a month is
and 10 weeks, right? That's how my mind works. So I'm thinking like there's 2 weeks of funds that you receive that now either it becomes a loan, or if you have other expenses available like rent or utilities, you can claim that amount. So saving your bills and your receipts and also your bank statements to prove that the funds went out. And that's important. It is not incurred. So for those that know accrual accounting, none of this is with accrual accounting. This is all cash basis. Whatever you wrote the check it's out of your account on the day that it has to be out of your account, and you can prove that you spent that money appropriately. So save your bills and your bank statements. And honestly, I would recommend if you have not done so, and I know there are some people still getting PPP loans because in the second round there's still funds available.
Awesome.
But set up a separate bank account with all of those transactions. That really is a good rule of thumb, just to say, hey, that's separate funds, and once it's gone, and I have the documentation. So if you are an owner or a 1099, you really you kind of get an automatic calculation based on 2019, and from that then you got to make up that other 2 weeks of expenses in that.
Got you. No, that makes perfect sense. So we've talked about documentation for the respective audiences, independent folks and those with employees. We've also talked about the changes in terms of how the guidelines have kind of shifted over time. One of the things that I think was really tricky on the front end is the relationship between the EIDL and the PPP. I know that has some relationship to how forgiveness is administered, right? Like if someone received the EIDL grant, essentially that served as an advance on the loan that took place with PPP. So let's talk a little bit about that. How does that look from a forgiveness perspective?
Well, it's just simple. So the grant part of that was intended to infuse some cash really quick into
Right.
some company's bank account,
Right.
so that the SBA could really process the actual loan application.
Right.
So what happens is if you receive the EIDL kind of advancement, not
Mhm.
the loan part, because you could have gotten both the
Gone either way.
PPP and
That's
the IDL, but just the advancement. That was the kind of $10,000 grant we all heard about,
right.
that then was changed, as you know. But if you receive that, you have to, once you calculate what your forgiveness amount is, you have to deduct that advance from that forgivable amount.
Got you. Got you.
So
So
let's say you received $10,000 a PPP loan, and you were able to prove and with your documentation, you had your payroll reports, or you had your rent, utility bills, and you could show kind of on your bank statement or cash transaction listing that the monies went out. You have to, and then you receive that advance because you had 3 employees that you claimed on that EIDL loan, and you got $3,000 in your account. The $10,000, although you can prove that all 10 is forgivable, $3,000 now have to be deducted from that, and it becomes part of the loan.
right. And so I don't know if anything has changed with this, but share a little more with us about what are the terms of the loan should you have to carry some of those funds going forward? Like percentages, I know there's a not a prepayment period, that kind of thing. Like, do we have clarification on, I believe it was 1%, not sure if that changed. And I think there was
it's still 1%.
deferral of payments too, right?
Yeah. So the EIDL loan is, depending on if you were for-profit or nonprofit organization,
Right.
range between I think 2.75 and 3.75, 30-year
Right.
fixed rate, which is awesome.
Yeah.
The PPP is the 1%, and it's for 2 years, and you can defer payments until really next year for 6 months, I would say.
Awesome.
And so honestly, and this is my professional opinion as an accountant and financial professional, even if you had to convert some of that money to a loan, the interest rates are so low.
Mm-hmm.
You know, and that's why I advised one of my clients who, you know, they were like, well, I'm just going to give it back. And I said, well, if you have a need for capital, it is right now cheap capital, at 1%. And if you're in a position to utilize that to hopefully make it working capital for you and your business, then I thought it was a win-win situation. So that $3,000 that I use in the analogy that you receive the EIDL grant or advancement, as some people call it, you will have to pay that back at the 1%.
Got you. Woo! There are a lot of things to consider, but hey, you know, like they say, more money, more problems, right?
Well, you are funny. It is, and this is what I would tell most small businesses out there.
Right.
Do not panic over the forgiveness process. Most banks want to help you in the forgiveness process. Now, if you went with some of the online financial institutions, like you went through QuickBooks or Nave, or some online lenders like that, I'm sure they have a 1-800 number that they will be able to walk you through this process. And I'm telling you that pretty much we want, the intent of the loan was to help small businesses kind of bridge the gap in this really unprecedented time. Sure. And I do think, and I'm holding out hope that our financial institutions will be help us through and walk us through this. Now, there is, you can create a spreadsheet. I actually use a spreadsheet, a very, long spreadsheet to make sure that all of my clients, all of the items will be deductible, especially when you get into wages versus owner's draw. That gets kind of tricky. And folks who make over $100,000, those calculations you have to be careful, because there was a cap at $100,000 in payroll. So let's be careful.
Yeah, very careful. So, Kiahna, I think we have covered a lot of the basics. I really want to just kind of give you an opportunity, if there are any additional parting thoughts that you would want to leave with the small business community around things that they should be considering with forgiveness, what would they be?
Well, just documentation.
Yeah,
I think that sometimes when you're working on your business and you shift it from working in your business, documentation, if you don't have the right controls, you don't have the right processes in your business, something as simple as making sure you can prove an expense to be burdensome or take a lot of your time, because now you have to, you know, go, go to your bank, pull your
right,
bank statement,
right.